Your cursor hovers over exit as the 5-minute candlestick reclaims VWAP by a hair. Level 2 flickers bids thin. An iceberg flashes at the figure. The spread breathes in, out. Your unrealized P&L is still green but shrinking. Candles leaning toward that single line that splits the session into above value and below value. You feel your finger tense. Price was trending from the open. Your stop loss sat where it should. Your higher time frame bias was clean. Yet the moment VWAP pulls like gravity, your plan dissolves into the oldest intraday superstition. It always returns to VWAP. A magnet in your chest syncs with a magnet on the chart. You don't close because your exit was reached. You close because a line bent your beliefs. The next bar kisses VWAP. You flatten, and then watch price rip in your original direction, leaving you stuck with the cheapest lesson in trading that somehow costs the most. Exits warped by an anchor you didn't even notice clamping onto your mind. Quick reminder as we dive in. Most traders lose money. This is education, not financial advice. Past patterns don't guarantee future results. Risk management is survival. Here's why VWAP useful, popular, seemingly objective so easily hijacks your exits. Your brain is a pattern-seeking engine inside a probability machine. The moment you draw a line that promises fair or value, you hand your risk decisions to a story. Mark Douglas warned that we bring everyday belief systems onto charts and then confuse expectation with edge. Price moves are random in distribution, even when patterns are recognizable in clusters. That probability mindset is shattered the second you treat VWAP like destiny rather than a reference. A line becomes a bias amplifier. You start filtering order flow to confirm it. You notice only the sells that support a VWAP pull and ignore the trapped buyers under resistance. You count every tiny mean reversion wiggle as proof. Brett Steenbarger would call out the performance spiral that follows. Focusing on outcome, don't let green turn red. Instead of process, follow the exit rule. Your self-talk turns from market-focused to self-focused. Then behavioral finance piles on. Trading Psychology 2.0 catalogues how anchoring bias latches onto first numbers seen. Today's VWAP. How loss aversion doubles the weight of a red tick over a green one. And how social proof, especially in chat rooms or a trading view stream with a bold VWAP tap incoming, pushes you to conform. In that moment, you're not seeing auction dynamics. You're hearing the room, and the body joins the party. The dopamine pop from early green makes you protective. Cortisol spikes as price ticks toward the line. Adrenaline surges in volatility. Your breath shortens. Time compresses. Now the paradoxes kick in. The more you analyze that line in real time, the worse your execution gets. The tighter you trail your stop just beneath VWAP, the larger the loss you take when a routine wick flushes you and the trend resumes. The more screens and indicators you layer, the less clarity you have about what your position really is a bet on your setup, not on a single session average. Market Wizards is full of pros who learned this the expensive way. When a tool became a belief, the market charged tuition. The market is always right, Douglas wrote in The Disciplined Trader, and that includes its right to overshoot and never retest VWAP all day. The system is the edge. Robert Carver and veteran system traders echo echoes of the way to trade, meaning the line is a reference, not a rule. The hidden truth is brutal and liberating. You're not afraid of VWAP, you're afraid of being wrong near VWAP, so you sell your plan to buy a feeling. The costly pattern looks like this. You take a strong opening drive, long on a clean A+ setup, pre-market high reclaimed, first pullback holds above a rising 20 EMA, cumulative delta confirms buyers absorbing at support. Volume profile shows acceptance building above the point of control. And your stop loss sits a fixed R below the last valid swing. You know your exit, partial at prior day's high, runner towards session high, with a time-based trail. Then VWAP hovers below price like a siren. As the move pauses, you anchor to it. Entry hesitation paralysis turns into exit greed extension. I'll hold because maybe it screams away, and then flips into stop-loss removal syndrome. I'll widen because it might magnet back. A tiny lower time frame pull takes price toward VWAP. Cortisol pops, your P&L bleeds 2 ticks. You dump the position right at the touch. 3 minutes later, a rejection wick forms, Liquidity flips. The same order flow that scared you becomes fuel, and your original target prints without you. You seek redemption. Overtrading compulsion starts a revenge trading loop. You short the next VWAP break. Get trapped as buyers reclaim, and suddenly you've donated the morning. The paradox bites harder. Perfect setups feel uncomfortable right at VWAP. The best trades often continue farthest after a failed mean reversion, and the more you move stops to lock in, the more you guarantee getting tagged by noise. By noon, you've run a chart pattern hallucination tour across timeframes, RSI divergence here, micro head and shoulders there. Anything to explain away one error, letting a reference become your ruler. Meet Marcus, the risk manager. He trades a 2-screen desk clean layouts, no indicator spaghetti. On the left, trading view with 5-minute candlesticks, VWAP, 2050 EMAs, yesterday's high-low, overnight high-low, and a session volume profile. On the right, level 2 and order flow tape, plus a simple dashboard for R multiples, current drawdown, and a session walkaway timer. He holds positions from minutes to a couple of hours, never past the closing auction scalps partials that define structure. And lets a runner test whether the day wants trend or chop. His mantra is Douglas straight. Risk defines the trade. Before the open he marks support, and resistance, plots the initial balance and writes 1 sentence per bias. If opening drive above ONH with delta confirmation, long on first pullback, stop 1R below swing, TP1 at PDH runner to IB extension. VWAP is on his chart, but it's not in his rules. He documents this in his playbook, born from the way to trade's mechanical spine. Entry criteria, invalidation, scaling plan, time stop, and exit automation labelled in his platform. When he's green early, his serotonin steadies his mood. When red, he names it cortisol present, reduce size. He uses Steenbarger's mental rehearsal in the 30 minutes pre-market. He literally closes his eyes and pictures a VWAP touch against his position, hears his heart rate rise and watches himself do nothing because his exit is the stop, not the feeling. If he must adjust, he adjusts with rules, only on fresh information, failed auction at a key level, or a time-based stall that violates the playbook. He tracks a stat that hurts and helps, how much P&L he gives back when he exits at VWAP versus when he lets the plan play out. The data humbles him. It also frees him. On trend days, he expects VWAP to act like a magnet for others and a decoy for him. On mean reversion days, he expects overshoots and undercuts. He takes neither personally. If I need VWAP to feel safe, he writes in his journal, I'll use size and stops to create safety, not a line. When he catches himself peeking at chat, he invokes a rule from Trading Psychology 2.0. No social inputs in live trades. He's not immune. He's insulated. So how do you rewire your VWAP Magnet Mindset without ditching a useful tool? Start with a pre-market protocol. 1. Define the day-type hypothesis with evidence gap context, overnight auction, economic prints, opening imbalance, breadth. 2. Decide VWAP's role today in writing. Reference only, trigger filter, or ignore. If it's reference, your exit plan must not mention VWAP. It mentions structure. And R. 3. Choose size via R, so the stop loss you can actually watch get hit without flinching. Sits below invalidation, not below a feeling. Systematize it. Borrow the mechanical discipline emphasized in The Way to Trade. Checklist, hard stops, partials, time stops. Build a hold map for exits. If price pulls to VWAP but stays above last higher low and cumulative delta doesn't flip, do nothing. If VWAP breaks and retests from the underside while your original invalidation remains, still do nothing unless your structure breaks. Then install neuroscience-informed circuit breakers, a visible heart rate cue, smartwatch, and a 1-minute box breathing routine, reduce adrenaline spikes. When HRV drops or heart rate jumps above your baseline during a live position, you don't touch the mouse, you touch the timer. A 90-second cooling off prevents the cortisol-driven click. Embed process goals a la Steenbarger. Today I will follow every exit rule for 3 trades, regardless of outcome. Score yourself post-session on process, not P&L. Now add Douglas's belief work. Write the belief that hijacks you. VWAP means price will revert, and counter-condition it with market truths. Price does not have to do anything. My stop and target define my outcome. Repeat it in calm states so it's available in hot states. From market wizards, steal the professional's bluntness. If you keep bleeding at VWAP, reduce size to the point you can comply. Mastery before money. And bring in Trading Psychology 2.0's data habit. Tag every exit as rule-based, VWAP panic, or discretion with reason. After 20 tags, compute the expectancy of each category. Traders don't change because they hear wisdom. They change because numbers corner their illusions. From Psychology of Trading, add scenario training. Replay a session, fast forward to every VWAP test against your position, and practice holding with tape, not hope. From the way to trade, add a no mid-bar edits rule. You only change a stop or take profit at bar close on your execution timeframe. Never inside a volatile 5-minute candle that's poking VWAP. Finally, build a platform constraint. Hide VWAP for 5 trading days while keeping structure and volume profile. When you bring it back, it returns as a secondary layer, not a central command. On a Tuesday open, watch Marcus execute with this rewiring. The stock gaps up through pre-market resistance. Opening drive holds above the overnight high. Buyers hit the tape with size. He enters on the first pullback that respects the rising 20 EMA. Stop 1R below the swing. VWAP sits beneath price and begins to climb. A 5-minute doji forms. A wick dips toward VWAP. Chat explodes. VWAP tap coming. His wrist buzzes. His heart rate nudged up. He clicks the 1-minute breathing timer, eyes still on tape. C'est moi quoi? His rules say, no action unless the last high or low breaks or a time stop triggers. The next bar flushes beneath VWAP by a few cents, spiking into a low volume node on the profile. Level 2 shows a hidden buyer absorbing. Cumulative delta doesn't flip. The candle snaps back and closes above the line. His partial at prior day's high hits. Runner remains. 10 minutes later, the initial balance breaks and the trend day declares itself. He adds once at the IB extension retest, the same stop logic, and lets the runner go until his time-based trail takes him out on a proper structure break. Another trader calls it luck. Marcus calls it not selling my edge to a line. Later that week, the opposite day appears. A lazy open, no range expansion. VWAP weaves price like a blanket. He recognizes the mean reversion day type from his morning hypothesis and flips his role of VWAP to trigger filter, taking only fades that align with rejection wicks and order flow turns, taking profits at nearby structure instead of dreaming of trend. The same tool, a different script, and no belief glue. By the close, the transformation you want isn't a holy grail exit, it's an identity. You're the trader who treats VWAP as a tool, not a tail. You feel the dopamine pop and don't chase it. You sense the cortisol climb and breathe through it. You respect adrenaline without obeying it. You accept drawdowns as tuition and protect R because risk defines the trade. You write rules in calm and obey them in heat. You understand that perfect setups often feel worst right before they work. And that more analysis around a single anchor tends to degrade decisions. You accept that some days VWAP really does act like a magnet. You still won't let it warp your exits because exits now live in your plan, not in a crowd's chant. You'll still have days where you flinch and flatten. Most traders do. But you'll have more days where you watch price tease the line, where others panic exit at value, and you quietly hold, scale, and trail. That's not stubbornness. That's probability thinking from trading in the zone fused with systematic discipline, from the way to trade, with Steenbarger's performance process at your back and market wizard's humility in your pocket. The magnet will always be there. The real anchor is you.